Yeah.
Order filled. Check us out.
You know what time it is.
This is Mighty Soldiers exclusive.
Yeah. Let's get it. Let's get it.
What's up, guys? Andy with Mighty Soldiers Trades. We are back with Market Discord with Gianni. I am super excited to have him here with us. We got a lot going on. So without further ado, just going to bring you on here. How you doing today, Gianni?
Good, Andy. How are you? How was your weekend?
The week, I don't even know about the weekend, Gianni, because like I said, right before I got in here, I got into a trade. I decided 5 minutes to go before you were going to be live with me that I was going to get into a trade. And then I was like, oh, that was a bad idea. And then I'm like, it's going to work out though. And I was like, you know what? I know it's going to work out, but I don't want to babysit this thing. And I don't really have the time to even put in a hard stop. So I said, I'm just going to close it flat. And so here we are. So Gianni, we according to Axios, we had the 7th worst year since 1929 last year. So I'm just asking you here, do you think that we're going to have more of the same this year, or are you still consistent with the bullish outlook?
Well, I think the first half of the year still leans with the bullish outlook. Coming into 2023, everyone was saying we're going to have a recession. The stock market's going to crash another 30%, and they were saying that after we already corrected 20 to 30% from the high. So I didn't think that was a very brave call to just follow the consensus at that point. I still stick with the idea that the biggest risk that the market faces is inflation. And, we've kind of been rallying off the premise that the Fed is near the end of its rate hike cycle. So that's why I think that's the big risk, is that if we see another uptick in rate hike expectations, that could present a downside risk. But, there is going to be a time lag between that point in time. So until then, I'm still in the camp of the bullish equity case.
All right, as far as bullish goes, here, if you don't mind, I'm gonna bring up my chart real quick.
Yeah, absolutely.
Share screen, Chrome tab, and there we go. There's Trend Spider. So if you guys can see this right now, I'm looking at the 4-hour on the S&P 500, this SPY, and I've been looking at this. It's looking very bullish right about at this point here. If you can see my like 404.92 or so. We have the 65 EMA, and we have held that 65. We're riding strong. This morning, I was looking at a level of 411.42 for a temporary rejection, and that's what I was in a really crazy way. That's what I was trading this morning. Anyways, Gianni. So basically, I don't know. I'm still stuck on the fact that I just shorted the market that looks like a beast. That's where I'm at. But I was all long 5 positions earlier, so pretty good.
Yeah. Well, no, I mean, and we were talking last week. I was saying that I wouldn't be surprised if we saw a 2 to 5 week pullback in stocks. We did decline one week, but you were more in the camp of buy the dips. And I was actually hoping that we were going to make a lower low today, but we didn't. So it actually kind of looks pretty bullish, as you said. But tomorrow we have those important CPI numbers, and I think that it really is going to impact the short-term direction of the market, especially, going back to the rate hike expectations. They've ticked up a little bit over the last couple of weeks. So if CPI comes in hotter than expected, I would look for some turbulence, but I really don't think that's going to be the case quite yet. CPI is a lagging indicator, and commodity prices are still down significantly from their highs last year. So, but I told you before we got on this call, right now I'm long the Russell 2000 and I'm long May corn. So in the futures market. So I'm, especially with what happened in Ohio last week, that big chemical spill, that's prime farmland in the United States. So hopefully, that situation is contained and we don't see a contamination of, agricultural markets.
Yeah, there's that, and there's also the aliens to be concerned about. But real quick, what you were just touching on, that this morning I had the same idea that I would really like to see us pull back on the SPY, maybe even as low as 398 for a bounce. And I had that feeling that this is going to pull back, but the charts just kept telling me that we were bullish and we were strong. So I had to trade what the charts were giving me. But what I was doing is I was getting in and out pretty quick. You don't necessarily get in and out really quick, right?
No, only when I'm wrong.
Only when you're wrong. That's a good one. Yeah.
Yeah.
But anyways, I did take some profit several times long, and I know every time though we're in any sort of a bear market, I've had that same feeling, and I'm sure a lot of us do, where you're like worst case scenario. Everybody's talking about the worst case, and when you're looking at this, you're not thinking long. You're thinking, man, this thing's gonna crush me if it goes down. It's gonna go all the way down to here. Everybody's looking at their broadening formations way down low and saying,
Right.
this is deep we can cut. And so I've actually talked myself out of some really amazing profit. And I'm sure that you have and everybody has with that. But yeah, this morning was that case exactly. But instead of me going with my feelings on what I thought the chart should do this morning, I just traded what the chart was giving me, which is, funny thing is that's my primary. My primary thesis is that we're going up. But for today, I thought we were going to pull back.
Well, you raise a good point, and it's the matter of time horizon and risk, right? So generally speaking, trading with the trend will give you the most profits. The longer term trend in stocks is up. I mean, even if you take out last year or even incorporate it, last year was a corrective decline, and we didn't make any significant lower low compared to the longer term trend. It's not like we took out the lows of March 2020. So the low of October 2022 was significantly higher than the low of March 2020. That's a higher low. The question now becomes, can we go out and make a new higher high above the high of November 2021 if you're looking at the NASDAQ, or January 2022 if you're looking at the SPY and Dow. So, that's how you have to do the trend analysis. Longer term trends up, intermediate term, we've been corrective since that high at the beginning of 2020. But short term, I would make a case that we're in a bull trend here too. As long as we don't basically take out those lows from December, I think the better risk reward ratio in this market right now is on the long side. But if we take out that 3,900 level in the SPY, we were talking about this last week too, I think then that story would change. And I think the risk reward ratio would favor the downside at that point.
Yeah, I mean, at that point, I would be looking around, just to see if maybe we can hold around 372 on the SPY.
Yeah.
And at that point, if we break anywhere below that, then this is that party that all the bears have been wanting to have and talking about. I don't know if they're wanting to have it, but they're definitely preaching it really, really loud.
Yeah, I mean, I know you've been around long enough, Andy. There's something about perma bears that just want everything to collapse, and it's like you realize that you're not going to be trading if everything collapses, right?
Well, I mean, plus, I mean, what we had the Social Security, was invested into the markets, right, under George Bush. Is that correct?
Well, they tried to do that. They tried to convert the Social Security fund into a sovereign wealth fund so that they could have had the ability to invest in the equity market. But right now, all they do is invest in treasuries, and that's a problem, especially when you consider interest rates are rising. Those securities that they own are being marked to market lower. So, that's why I think that inflation is the biggest risk in just the entire financial marketplace right now, because that means higher rates. And, we've talked about how governments can't afford higher interest rates. But, the days of QE, when inflation is, 0 to 1% year over year, you can do QE. You can't do QE when inflation is 5-6%. You can't artificially push interest rates to 0 or, to 2% on the long term of the yield curve when inflation is running 6%. It doesn't work that way. So that's where we are now. And I think that, there is going to be a new style of Fed intervention when the time comes to maintain liquidity, but it's not going to be what we've used to. So, that's all part of being adaptable as a trader.
Yeah, I mean, basically for me, I can tell you that I'm still learning more of the fundamental side of this. I just, the charts are what tells me, what I need to know. And I really appreciate your input here. And basically the more I learn about all the fundamentals behind it, it really helps me to analyze these charts, Yeah. And at first I just thought, we just need the charts, but I think we spoke about this last week. There's just some news that you really need to know and you really need to anticipate and be ready for. So looking at that calendar, knowing when CPI data is coming out, knowing when the Fed's going to be speaking or what's going to happen, those are really important. But then even being able to understand beyond that of what exactly that means for the markets. And that's why I'm having you over here, Gianni. I really appreciate you coming around here because there's so much that I have to learn. And I know that you know it. You are, I said it in my tweet today, I think that even the professionals can learn from you. So,
well, thank you, Andy. Well, I still do place the greatest emphasis on the charts. One of the things I like to say is that sentiment follows price, not the other way around. I mean, everyone was bearish in October. I mean, you're calling for a 20% drop in the S&P after we've already fallen, 25%. I don't think that's a brave call. So that's why coming into this year, I thought, we're going to get a nice rebound. And so far that's unfolded accordingly. We're not out of the woods yet because to me, that big resistance zone in SPY, 40, 50, 4,200, we haven't cleared that yet. And that needs to happen more particularly. I would like us to take out those highs from August 2020. So that's basically how we assess risk. And, you better believe that if and when prices take out that $4,200 level on the SPY, people are going to start singing a bullish tune then. But at that point, we'll probably go sideways. That's just the nature of markets. We've seen it time and time again. Go back to March 2020. The world was ending. That was the best time to be buying stocks. The worst time to be buying stocks was in December 2021. And, same thing with crypto. So, yeah, that's how we have to analyze sentiment. And that's one of the beauties of FinTwit. I know you've been in the community for a long time too, Andy. It really is an exceptional tool. It is anecdotal in a sense, but just to be able to gauge sentiment, once you observe it for a period of time, and obviously pattern recognition is a big part of being a trader, but you're going to start to recognize patterns in the collective sentiment as well. And being able to incorporate that into your trading from an intuitive standpoint, I think is very important too.
So speaking of, actually, let me real quick, if you don't mind, let me bring this chart up yet again. Anyways, here we go. So speaking of chart patterns and pattern recognition and everything, pretty much, I mean, this looks like some really nice like bull flag sort of consolidation here that we're having on the daily for the SPY. And what that usually you would assume that that's gonna resolve itself to the upside. So I mean, I'm really still looking at this to the upside. I don't see the bear thesis until it presents itself again. And right now we just don't seem to have it.
Yeah, well, you can even zoom out a little bit. It looks like you have a little bit of a rounding bottom there too, forming an SPY. The Dow Jones has a really nice inverted head and shoulders formation. I have an upside target in the Dow at 40,000. For the SPY, I like the idea of 45, 4,600 by the time of June. So yeah, the Dow there, you have the neckline. We're trading right under the neckline of the inverted head and shoulders. You have the left shoulder at that low. I think it's in June. You have the head at the October low and the right shoulder's forming now. So you clear that neckline in that $35,000 area. I think you get a slingshot up into the 40,000.
And this is where a patient trader really profits, So
Yeah.
if we can see these things and understand how price works and the patterns that we get from everything. One person said to me before that it's like the currents of the ocean, that
it is.
Supply and demand is like the currents.
Yeah.
I would say it is, but there is also more sophisticated supply and demand, and there's more powerful supply and demand. But it doesn't matter what there is, because it's still, in the end, it's supply and demand, and it does give us these patterns, and it's been doing so since, Jesse Livermore way back in the day. So, and beyond that, way beyond that.
Yeah, it's true. In terms of technical analysis, my understanding of the history is that it really started to come about like in the late 19th century. But you read some of those old books, Edwards and McGee and books of the sort. They have charts in that book from the 1910s, 1920s, and the chart patterns are all the same. So that's because human behavior really doesn't change. We tend to be greedy at the highs, and we tend to be fearful at the lows. And that's, we have to counteract that as traders. So that's the job that we put in time for every day.
Well, that's great stuff, Gianni. I really appreciate you coming on here and joining us. Where can people find you?
You can find me at Mercator.com or MMAcycles.com. I'm active on both sites, and even Benzinga. I do quite a bit of publishing with them too, so that's a good place to find me.
And I'm not sponsored or an affiliate, but I can tell you guys that if you really want to get the easiest take on technical analysis, Brian Shannon's book, Technical Analysis Using Multiple Time Frames, but he just had a new book, The Anchored VWAP. So if you guys check that out, I'm just mentioning it because I love it. I still go through it now. And Gianni, honestly, I would love to see your book one day.
Yeah, I know. I need to do that.
Yeah, there's a lot on the to-do list. I understand that. But thanks again, Gianni, and I look forward to seeing you next week.
Thanks, Andy. Have a good week.
Have a good week. Thanks.